Alrighty, before I get started, please type where you're from so that we know where you're from. And if you've got any questions and you want me to answer some questions, please just type them to me and I will assist you. And let's get started. How exciting. Welcome everybody. Dubai. Nice, man. Durbs, Joburg. How's it, Selwyn? Lekker, Benoni. Awesome, all over the country. So, welcome to the seminar. I'm really excited to be here and to help you and to be a servant leader and to teach you how to trade. I'm going to teach you how to trade like a hedge fund manager. I'm going to teach you how to trade with confidence. I'm going to teach you how to read a Forex chart like a professional trader, how to never have losing trades, how to make 200 pips profit per trade. And for the people that are new to the webinar, let's see, guys, please type in the chat if you made 200 pips profit today with this move in gold. Did you do it like I've been teaching you? Say yes or yes so that people can see that this thing is real. Okay, nice, Guy, well done. And who else made 200 pips? Lovely, like to see it. And we're going to teach you how to stop losing money and why you keep losing money. And that is the key that we're going to help you with this evening. So who am I and why should you listen to me? So my name is Alan Solarsh and I'm a master trader with my broker. I've got 8 years trading history and experience. I'm a serial entrepreneur. I'm a full-time Forex trader and I've mentored over 100,000 people. But life was not always like this, I can assure you. I just want to know if you can relate to my story because it's pretty dismal. I was failing. I had no money. I was blacklisted. I was in debt. I was broke, broken, and depressed. And I could not even feed my kids, which is really shocking. So I've got twins. They're 21, almost 22. And when I lost all my money, they were about 5 or 6. And sure, I lost everything, guys. I lost my wife. I lost my kids. I lost my car. I lost my home. And it was like devastating. And I tried everything. I tried network marketing. I tried different businesses and I kept on failing. I tried affiliate marketing. I tried spam. I tried SEO. And sure, what I've done about 15 or 20 different businesses. I also tried some Ponzi's. I didn't know they were Ponzi's at the time. I got caught up in them and unfortunately lost it all. So I went from zero to hero. I was actually a flea market success story. Turned my business into a multi-million rand business. It was worth about 28 million rand, and within 6 months, I'd lost it all. So if you can relate to my story, say yes in the chat box because I am empathetic and I feel your pain. So I believe, these are my belief systems. I believe that we're hindered by the institutions, the banks and the insurance companies and the people that you invest with. I believe that they prey on us with their greed and their lack of empathy. They keep our money. They charge us outrageous fees, give us cents on the dollar in interest. Then the government taxes us on our interest, and then there is inflation, which leaves us worse off than we were before. So we're not going forwards, we're actually going backwards. So my wife told me a story about a lady, she's on a Facebook group, that invested money for her child that she adopted that was going to go to university in 5 years. So they took out an endowment policy or unit trust. And when they went to draw the unit trusts, because she hadn't been looking after her unit trusts had grown by 8% and 8% in 5 years. It's a sad, sad story. And the institutions just don't care, guys. They just do not care. Can you relate to this? Have you experienced the same thing? If you have, say yes. So I'm going to jam-pack this webinar tonight with value. I've got an institutional trader on this group tonight on the webinar. He's going to give us some insight as well. So you're going to really have a lot of information. I promise you this will I I will not be wasting your time. And then I'm going to offer you my mentorship program so that you can continue with your learnership. So get a notebook or digitally record this, because I'm sure you're going to absolutely love this, and the information that you're going to take away tonight is going to be extremely valuable. So the problem in trading is as follows. You're not trading and you're not making money because and you're not profitable because you are gambling. And how I know that is because you guys are focusing on this screen over here. So if you were on my webinar last week, you know that we took some trades. So we're going to close them out this evening because I trade live with you guys. So you guys are focusing on this trade, on this chart, on this screen with the numbers going up and down. And then when you get into a bit of profit, you scrambled and you closed the trade and you've made a bit of profit, and then the currency goes up and you get back in, and then all of a sudden it reverses against you, and then you run into trouble. If you can relate, say yes. And where you should be looking is you should be looking at the chart. That's the only place you should be looking. So Warren Buffett says risk is for those that don't understand, and I agree with him, because if you don't understand how to read a Forex chart, of course there is risk. If you knew how to read a Forex chart and you understand what's going on the chart, is there risk? I say no. The risk is mitigated. So Forex is simple, guys. It's not easy, but it is simple. And the reason it's not simple, or the reason it's not easy, is because of your emotions. And your emotions play a huge part in your trading. So people say, don't trade with emotion. I say that's absolute nonsense. Okay, you're not a robot. You have emotion. We're emotional beings. We're not anything else. We're not human beings. We're human doings with emotions. And when you take a trade that is, if you're trading on a cent account and you take a trade of 20 lots and you've only got $100 in there, I assure you your emotions are going to flare up when as you open the trade, you're already down like $15. So that's because of the spread. So you're already down 15% of your account and you're freaking out. And we're going to try and help you to get that under control. So I've got a fantastic group that I want you to join. It's a Telegram group. And I'm going to post some links into the chat box, so you can start now by, if I could just find my my Zoom, that would be great. Okay, so let's go there. Let's open a text chat. Let's paste that in there. Right, there's the success group. Please join it. And I'm going to help you to get your emotions under control using meditation, affirmation, breathing. You guys, a lot of you call it prayer, or I call it meditation and affirmations. And that's how I've turned my life around, was through these things. I use fantastic techniques which I post and I share with you on the success group, because success doesn't start with learning to trade. Success starts with the mind and the heart. So once you understand that, then you can start attracting money into your life, because there is an abundance of money out there. Some of you may be in a position where you have a lack of money because of a lack mentality, and some people are stingy. They don't feel that there's enough money in the world because they have this lack mentality. There is more than enough money around in the world, and I'm going to help you to get that. Okay, so before you start trading, you need to understand why you're doing this, and the secret is in the 5 whys. Okay, so you need to understand, firstly, on a surface level, why you're doing this. Why do you want to trade? Why do you want to make money? Do you want to build a legacy? Do you want to study? You want status? You want philanthropy? You want to be a philanthropist? Or do you want to, are you just doing this for survival? For me, I was just doing this for survival. Only later on, after going through some self-development and some self-discovery, did I understand what I needed to do, and I needed to ask some critical questions of why I wanted to get rich. So it's not just about having a holiday home or clothes or brands, or spending time with family or travel or a car, friends or Rolexes. You need to understand, you need to ask yourself, why do I want the Rolex? And you'll come up with an answer. And then you need to say, well, why do I want that? And you'll come up with an answer. And by the time you ask yourself 5 questions of why, you should really understand why you're doing this. And they say that if your why doesn't make you cry, it's not your real why. So once you understand what your real why is, you need to understand how it's going to make you feel when you have achieved it. Because I assure you, after trading with us, I promise you, you will be making money. So guys, in the chat box, if you're making money, say yes. So that people can see that this is 100%, because I get a lot of people on Facebook saying, this is a scam, trading's a scam, you lose money, 98% of people lose money. That's true, 98% of people do lose money because they're not trading, they're gambling. So we're going to help you to remove the gambling aspect. So how is it going to make you feel? Is it going to make you feel content or proud? A sense of achievement, excited, successful, elated? You need to be writing this down. You need to be journaling in it. And who and what will you become once you make the money? Will you become a better or worse version of yourself? Hopefully better. Will you become stronger, more popular, thinner, fatter, better friend, husband, wife, mother, father, mother? And once you've got answers to these, you need to ask yourself why. Okay, again, so why will you be a better friend? Why will you be a better husband? What are you going to contribute? And just keep on asking these questions of why. And eventually you will find your purpose in life, because most people are traveling around in this world just aimlessly and basically robotic behavior, where you don't actually know why you're doing stuff. You're just doing stuff because you're doing it. You don't even like doing it, but you're doing it because it's a means to an end. So timing is everything in trading. We're going to teach you that. I trade on a 4-hour chart, and I set my alarm clock up to every 4 hours when a new candle opens. Most of the time I don't do it anymore because I've created a clock, an internal clock that just knows to look at the clock, the MT4, my MT4 at the 4-hour time slot or just before, so that I can start trading. So you need to keep a journal. Most importantly, you need to keep a journal not only to record your why and the stuff that we've just discussed, but you need to keep a journal to write down exactly how you felt when you took a trade, why you took a trade, when you took a trade, what were the circumstances behind the trade, and most importantly, okay, why you took. Sorry, guys. I don't know why it keeps muting. I have no idea, but we'll just carry on. Let me just ask, where did I get up to? Where did you guys hear? And I'll go back in the slides. Unmute yourselves, guys. Had the same problem last week. Can you guys hear me? How will it make you feel? Okay, cool. Okay, so you need to understand why, what you will feel when you get this money, because I'm sure that when you start trading with us, you will start making this money, and you need to understand how it's going to make you feel. You also need to write down, who will you become when you make this money? Will you become a better person, a better version of yourself, or a worse version of yourself? I hope a better person, and I hope maybe a more popular person. These are questions that you need to ask yourself. And when you start asking yourself why you want these things, okay, ask yourself 5 times why you want these things, so that you can really understand what your purpose is on this planet. Most people go about their life aimlessly like robots, and they don't really understand what their main purpose is, why they are here, why they were put on this planet. We all ask the question, but we don't know or understand how to get to the answer, and I'm going to try and help you to do that with these questions. So timing is everything when you trade. I set my alarm clock to every 4 hours because that's what I trade on. I trade on a 4-hour chart. It's up to you what you trade on. My strategy works on all time frames, but I like to trade on a 4-hour time frame because I don't want to be a hostage to my charts. I want to have a life. I don't want to be full-time trading in front of the screen. I've got other things to do. I don't like scalping. I like to swing trade. So you need to keep a journal, and the reason you need to keep a journal is not only to write down the things that we've discussed, but it's also for you to understand like you need to write down why you took the trade, what were the circumstances behind taking the trade, and most importantly, your emotion behind taking the trade. Because if you don't write your emotion down, you will not get your wallet management under control. So it's very important to understand where your heart landed up. Okay, when you took the trade, did your heart land up in your throat? Did your stomach land up in your throat? Did your heart land up in your stomach? How did you feel? Why did you feel? I'll take your questions just now, guys. I can see you guys are raising your hands. If you can still hear me, say yes. Okay, cool. Thank you. So most people trade like this. Most people, if this is you, say yes, okay? Most people would talk like this. You place a trade, and you place your stop loss 30 pips or 40 pips below the bar line, and then you put a take profit at 15 pips. So who trades like that, or who used to trade like that? Say yes, please. Okay. So a couple of you are saying, yes, that's good. So I believe that this is the wrong way to trade, because the risk to reward ratio is 2 to 1 against you. So if you have a losing trade, you have to have 2 winning trades to break even, which is quite tough. Why would you close the trade if you knew what the direction was of the trend? So here, if my traders know, okay, that we would have entered the trade over there, and we would have written the trade like we did today, up until here. That's what we did. Who did that? Who followed that strategy today, or the last couple of days? Who followed that strategy? Did you guys do that and then you made money? Correct. Okay, so you guys are doing the following. A lot of the guys out there are doing the following. So you enter a trade like 1, 2, you enter a trade there, and you close the trade there. So that is the size of your trade. This little thing over here is the size of the trade. Okay, then you may place another trade, and eventually it turns against you, and now you're stuck. Because normally what happens is when you're winning, you start increasing your lot sizes, okay, or you get rambunctious and a little bit arrogant, and you're increasing more than what your wallet can handle, and then when it turns against you like it did today, you're blown. Where with us, we're not blown, we know what we're doing. Okay, and that's why a lot of the traders made profit today. So you need to understand what's going on the chart. So I hope that you did your homework, because you're going to need it this evening. So the secrets to success of professional traders is hedge trading. Institutions use this method. It's a very, very clever method of trading. Institutions and banks do not use stop losses. They use a method called dollar cost averaging and hedge trading. No stop loss, no take profit. Very, very simple. So what is hedge trading and what is dollar cost averaging? So to simplify it, most people invest traditionally with a financial institution. You sign a debit order, you invest your money in unit trust or something, and the broker or the company that you're using, whoever it is, will then take your money and they will invest your money in whatever you have said that you want to invest in. Usually blue chips, Facebook, Microsoft, Coca-Cola, IBM, stuff like that. Okay, and what will happen is that they will then put money into they'll purchase those shares or those units for you. Okay. Now, what they'll do, they don't look at when the chart is at its lowest. They don't buy at the lowest and sell at the highest. That's not what they do. They just invest on long-term strategy. So maybe you took out your debit order here. Okay, this is month 1. You took out a debit order here. Okay, and then the next month it drops, and you bought some more shares over there and it drops, and you bought shares over there and it drops, and this is month to month. So it's 4, 5, 6 months of losing money, okay, and then maybe a year or 2 of losing money, and then all of a sudden it goes up. So all these shares over here that you bought have lost money, but the next year they have made money. So dollar cost averaging works where it doesn't matter what the price is, you purchase to try and mitigate your risk, because we know that long term those prices of those shares are going to increase. And that's how the stock market works, and it mainly works like that because of inflation. So when there's inflation, the cost of goods increase. It's not the profitability of the company that increases, it's the amount of money as a not as a percentage, but as a rand or dollar value, the percentage usually stays the same. A company normally makes 10 or 20% profit at the end of the year. It doesn't increase in percentage. The percentage stays the same, but the value of the money, that of the profit, increases. Therefore, the share price increases. That's how the stock market works. Okay, so I hope that you understand that. So we use the same concept called hedging and dollar cost averaging. So how is dollar cost averaging explained? Dollar cost averaging is a strategy to manage price risk. Instead of purchasing shares at a single price point, with dollar cost averaging, you buy in smaller amounts at regular intervals regardless of price, which is exactly what I've explained on the previous slide. So the benefits of hedge trading is no more losing trades, no stop loss. Because we don't trade with a stop loss, you increase your profits because we don't get out of the trade with a take profit line. We get the full length of a trend because we understand how to do that. And this system becomes predictable and dependable, which builds confidence. So my strategy has an 85% success rate on entries and exits. I hope that you've done your chart, your homework. If you haven't, you're going to be lost. I know that I did email it to you. So what I'll do is I will send it to you now in the group. You can just copy it. And if you haven't done it, and then do it when you have a chance, please. So I'm not going to go through the chart setup with you, but let me explain to you what I use. I use a combination of moving averages with candlestick analysis, not just any moving averages. I use the moving averages that the banks use. I was taught by an institutional trader. We had insight that worked at a bank, and he taught me exactly what the moving averages are that the institutions use. So I use a 34 moving average. It's just for me to acknowledge why the price has stopped. You know, you look at your chart and you say, you look at it and it like stops on a line. Where did it stop yesterday? I think it stopped on the 34 moving average. Can't remember. There was a time that it just stopped dead. It just stops dead. Like, look here. It stops dead on the 200 moving average. You can see here. On the 200 moving average at the bottom here, it stops and it started to reverse. That's crazy that it's done that. Absolutely mental that it's done that. Okay? So if you use the correct moving averages, then you start understanding and you can start having a crystal ball into what's happening. So I use a 50 moving average, and the 50 moving average coincides with the 100 moving average on a 1 hour chart. So here's the yellow line at 1942. We'll just put it there on the 200 moving average. And if I change the time frames, you'll see that it's very close to, I don't know why it's out for some reason. Oh, sorry, it's the 50 moving average. What am I talking about? It's the 50 moving average, which is up there, which is my purple line, purple and white line. So on an Android, you can just change yours to just plain purple if you couldn't do the dotted line. So if you change this to an H1, you can see there, here is the 200 moving average. So it is a key reversal point. So when the price gets to the 50 moving average, you must know that there's going to be a little bit of a sideways market, sideways move, and usually the price stops at these levels. Okay, and I use the 100 moving average just to understand again why the price has stopped and what the banks are doing. So we know that the banks are trading moving average to moving average in the last couple of months, maybe 6 months, and it's good to know where they're trading and why they're trading. Okay, and the 200 moving average is a very strong reversal line. I call it a no trade zone. And on that note, guys, it's time now to do some live trading, and then I'm going to take some questions. So we're going to go to the phone, and now we're going to close out this trade that we took last week. I said to you that we're going to trade live with you guys. It's exactly what we do. So we know that the price is reversing. When we get to the 200 moving average, this is a live account, as you can see. FPS Real, it's a live account. I trade live with you guys so that you can understand what we're doing and why we're doing it. Okay, we're going to close this trade, and we're going to close our hedge trade. So this is a hedge trade. It's when you buy and sell basically at the same time. So there you go. Or when you make a mistake and the price goes against you. So let's say you take a buy trade and the price tanks. okay, instead of closing the buy trade, just place a sell trade and go with the market. Go the direction of the market. Don't trade against the market unless you're dollar cost averaging, which I'm going to explain to you just now. So we took a trade last week. We took a buy and a sell just to show you exactly what the concept is of hedging. So we've got a buy and a sell, which means that it doesn't matter which way the price goes. Okay, my drawdown will be exactly the same. As you can see at the top here, it's still 590. So why is the 590 moving if I'm hedged? And the reason being is because of the spread. It's the difference between the ask and the, I don't have it set up here, so let's go there and just go to my charts and try and ask price line, trade levels, blah, blah. It is on. Maybe it's too close together. Oh, it is on. Okay, sorry, I didn't see it there. Okay, it's the difference between the ask and the bid. Okay. So basically, the broker he's got a Forex feed, okay, from a bank called the liquidity provider. The bank charges the Forex company for this feed, for this Forex feed. And then the Forex broker sells the Forex, this feed to us. So how does the broker make money? Makes money in a couple of ways, but one of the ways it makes money is every time you place a trade, the broker marks up the price that you're going to buy, and he buys it at wholesale and he sells it to you at retail, and the difference in the price is what the broker keeps. So you can see here, if we change it to a 1 minute chart, you can see here the difference in the price here. There's the difference. Okay, and if we go here, we're trading on gold, you can see here that the spread is 2.5 pips. 2.4 pips. It's very, very low. Right, so it's time to answer some questions, participants. So we got some hands up. Anton, I'll allow you to talk. Ahmed Musa, I'll allow you to talk. Abel, I'll allow you to talk. You can now ask questions if you have some questions, and then I'll continue with the webinar. Okay, cool. Let's continue with the webinar. So those are the moving averages that I use, together with a 400-year-old trading strategy called candlestick analysis. Very, very clever system that I use. This system was developed by Honma Munehisa, a Japanese rice trader, the best trader, most successful trader of all time. So I see that I've got some questions here. Let me just see here. So this is a tried and tested system. Tried and tested over 400 years. Okay, this system, this strategy works. My traders can tell you that this system works. Guys, type in the chat if the system works. Type in the chat if the system works. Say yes. So I don't use RSI, MACD, stochastic, Bollinger Bands, Fibonacci retracement levels, Elliott waves. I don't use any of that stuff, okay? Because those indicators are lagging indicators. They're not predictive indicators. There are new technologies. I don't use pennants and I don't use rising wedges. I like to look at it, and it's interesting to watch, but I don't really focus on it. I don't base my trading decisions on that. So for me, the game changer was the 8 exponential moving average, which is the red and white dotted line on my chart. It tells me exactly the right time to enter, to open a trade, and it tells me the right time to exit a trade. So this is where you need to focus, guys, okay, because the training has begun and you need to understand what we're doing here. Okay, so the 8 exponential moving average is key, and the doji is key. So yesterday, the guy said to me, would this be a good time, a good space to sell any bars which are in profit considering the gravestone doji? I said, oh yes, there is. So yes, I closed the bars that are in profit. This was at 12:07 today. 12:07 today. So let's look at the chart and see what happened. 12:07 today chart. So the candle started at 9 o'clock, so it is right. The candle started at 9 o'clock and then it closed out at about 12 o'clock. And that's when everybody said it's a gravestone doji. What must we do? We all closed it out. And then a couple of minutes later, maybe 10 or 15 minutes later, there was a plummet in the price. So very, very important candlestick to note. So what is a doji? A doji is when the bulls and the bears are fighting and there's no direction in the market. So the market is basically supply and demand. That's what the Forex market is. So it's buyers and sellers coming together, and if they can't make a decision on price, then basically the candle shrinks to no candle. So you need to not get confused between a doji and a spinning top. So a doji is an oblong. That is a doji, excuse me. This is a spinning top over there, an inverted hammer. Okay, I'll just give you another example of a spinning top. That is like a spinning top over there. That's a spinning top. That's a spinning top. The flatter it is, these are dojis over here. So it's an oblong, not a square. Don't get confused. Okay. So these are the rules that I trade by. There's only 2 rules that I use. Okay. Very simple to take away the clutter so that you can make decisions. Okay. Don't worry about anything else. You just need 2 rules in your life. The first rule is when the candle opens above the 8 exponential moving average, open a trade. Very simple. When the candle opens below the 8 exponential moving average, if your buy trade is in profit, close it. If it's not in profit, place a sell trade and hedge. Exactly what we've done in this case over here. We are hedged. So if it went against us, we would place a sell trade. Do you understand that point so far? Put your hand up if you don't understand, and we can help you to understand it. So if you look at this chart over here, you can see here, this is the first candle that opened above the 8 exponential moving average. This is the second candle that opened above the 8 exponential moving average. So we placed a long trade. And we continued with the long trade. We would have sold the long trade over here. We would have gotten out. And then we probably would have gotten back in over there, gotten out there, gotten back in over here, okay, and then gotten out over there. So every time you see a doji, you can get back, you can get out of the trade. And then if you see that if the price is going up, you can get back into the trade because the doji has failed. But normally the doji is very, very successful. So let's go and have a look at some of the examples. So here's a nice big trend over here. We would have gotten in on the second candle above the 8 exponential moving average, which is this trade, this candle over here. And we would have ridden it up to here, the doji. Okay, and then we would have gotten out of the trade. If it went up, we would have placed a new buy trade, and then we would have gotten out. If we didn't get out, okay, because it was in profit, we would have gotten in again over here, and then we would have gotten out at the doji again. So there you've gotten in and out 4 or 5 times within this trend, and this is not looking at things in the past, guys. This is how we trade. So there we would have gotten in. That's 172 pips. Then we would have gotten in again, and we would have gotten out there. It's about another, probably another 20 pips, and we would have gotten out. Okay, so 190 pips we would have made just from that trade. This works. Okay, we'll take another example. Where's another example? Let's take another example. No doji over there, but I'm just discussing the doji with you guys for the moment. So here's another one. Yeah. Okay. Would have gotten in here on the second candle above the 8 exponential moving average. Let's get a line. Second candle above the 8 exponential moving average. So we ignore this candle here because it's a doji, although it's the first candle. Because it's a doji, we ignore it. So we open a trade on the second candle, which is this one, okay, which is that one over there. And when we ride it up to the doji, okay, we ride it up to the doji and we would have made 189 pips. Then we would have gotten back into the trade over here somewhere because it's engulfing that doji. And then we would have closed the trade at the doji again. And then we've got a huge plummet. So again, we would have made another 990 pips. This is very, very simple. You just need to understand the rules. Once you understand the rules and you've written the rules down, you can start trying to remove the emotion about making a decision about placing a trade. The problem with placing the trade is the emotion behind the trade, and that's where you're getting stuck. It's with the wallet management. You may know the rules, but because your wallet management is poor, you're second guessing yourself because you don't want to lose the money, or you don't want to hedge too large, big lot sizes because you haven't got enough margin in your account to then place a third trade or a fourth trade or a fifth trade to dollar cost average out of the bad trades or the trades that have gone against you. In other words, does that make sense for you guys? For my old traders as well, does that make more sense for you? Say yes, say no, ask questions. Guys, you need to ask questions here because that's what I'm here for. Okay, so we've got raised hands, so let's answer some questions. Abel, you can talk. Daslin, Tembisile. Okay, you can talk.
Hi, Alan.
How's
Daslin,
it? How's it, Daz?
I just want to go back to some of those examples that you've given us where you see a doji, you close it out,
Yeah.
and then you get back on the uptrend.
Right.
I think the last one you mentioned, it was engulfing something. Can you maybe just talk more about those when you get back into the trend?
If the candle has gone higher than the wick of the doji, or at least 50% higher than the wick of the doji, get back in. If it fails, okay, you'll hedge. So let's do an example so that you can understand what I'm talking about. So let's find an example. So this is the first candle that opens above the 8 exponential moving average. Okay? So this is the second candle that opens above the 8 exponential moving average. So here's candle number 1. This is candle number 2. You get in. And then all of a sudden there is a doji, so you get out. So now you may have closed that trade in a profit, hopefully in a profit. If not, you would have, because you got in here and you would have gotten out there, so you've made a very small profit. But then it's sideways, and then there is an engulfing candle. In other words, the candle is bigger than all these. It engulfs it. Okay? So once the price goes higher than the wick of the doji, so there, dude, get back into the trade. Okay, get back into the trade. And now you're going up. So now you've made a small profit over here with this candle. And now we get back into the trade and we carry on trading and we ignore it and then we get out. Where do we get out? Okay. Then we would have opened a sell trade. Would have opened a sell trade over here. So now that we've gotten back into this candle over there, let me take another screenshot. Okay, so we would have gotten into the trade, would have bought into the trade about here, and then the price reverses. We don't close the trade, but we get into the trade when the second candle opens below the 8 exponential moving average. So we would have gotten into the trade on this green candle here as a sell. That's when we would have gotten back in. So these two trades are basically at break even. Do you understand so far?
Yes, I do understand.
Okay.
So it's like the second trade is like a hedge.
The second trade is your hedge. So you're not going to close your buy trade. You're going to lose it.
Right. Cool.
Okay, just lose it and don't worry about it. Forget about it. The price is going to come back. If it doesn't, we'll start removing lot sizes. And how do you do that is, check this out, Oaks. I don't know if you know this, but you don't have to close. Let's say the price moves 500 pips away from the trade. Now you've got a trade right at the bottom or right at the top, and it's been there for weeks or maybe a couple of months. Okay, now you want to
Sorry,
get out
Alan,
of it.
are you showing us another screen?
Oh, yes, I am. Okay, so you go over here and you say, close the trade. And you can say 0.01. And you can say close. Now you're not hedged anymore. You can see here, this trade is 0.09. Before it was 0.1. So you can use past profits, 20% of your profits, 10%, 40%, 50% of your profit, to start getting rid of a trade that is bugging you or that is taking up a little bit of your capital that's irritating you. So I want to close this trade in profit because we're profitable. We touched the 200 moving average and we're out of the trade, okay? Because that's what we do, right? When it's on the 200 moving average, we close the trades that are in profit. End of story. That's the rule. We follow the rules, okay? Do you need another example or are you good?
I'm good, thank you.
Okay, cool. Anybody else got any questions? You can put your hands up if you've got questions and I can answer your questions because this is a team sport, my people. If you don't ask questions, I can't help you. Okay, that's why you're here. So don't be shy because you're on a Zoom call. I'll tell you a story. I failed matric. I didn't do matric. I dropped out because I didn't want to do my English speech. I couldn't stand up in class and speak in front of people because I had a bad experience in Standard 6. Terrible experience at school where I had to stand up and recite 3 lines or 4 lines in Afrikaans in front of the class, and I was a stuttering, stammering idiot. And I had the stigma that lasted through my entire school career. Eventually I just dropped out of school because I couldn't handle it. So I get it. I get it. So I'm not a well-educated person. That's why I say to you, I had to learn this because if not this, then what? I'm unemployable and I have lots of disadvantages against me by trying to get a job in South Africa. So again, if not this, then what? It's very tough out there, so I get it. So let's continue. The rules are simple. When the second candle opens above the 8 exponential moving average, you can open a buy trade. When the second candle opens below the 8 exponential moving average, you can open a sell trade, close your buy trade if it's in profit. If it's not in profit, hedge. Don't close it, just open a sell trade for the exact same lots that you used with your previous trade. No need to increase your trade and try and be sexy and cute. You don't know what's going to happen. So instead of being unhedged, rather be 100% hedged. Instead of taking chances where you can blow your account. So I have a question here. Another example, please, Josh Pillay. Cool. What time was that? 1943. Okay, sweet. So let's go back here. Go back far in the past. Right. So here's another example. Oh, we've done this example, but let's do it again. Here's the doji. First candle is a spinning top. Second candle, you get into the trade. So you get into the trade here. This works all the time, guys. Okay? Step. So you're getting into the trade. When the second candle opens, that's a doji. So we would have missed this. That one, this one's failed. So this first candle, would have gotten in over here. That's the first candle above the 8 exponential moving average. Why? Let's show you. Doji. Can't trade. First candle above the 8 exponential moving average, but it goes south. Then this is the first candle that opens below the 8 exponential moving average. Then it goes above. Then this is the first candle that opens above the 80 exponential moving average. And this is the second candle that opens above the 80 exponential moving average. This red one over here. So you place a buy trade. And then you take the trade until the doji. So what's the length of the trade? What's the length of the trade? Up there's your doji. Ugh, you can't see. I'm on the wrong screen. Okay, there it is. 116 pips. 116 pips at 0.01 is like, it's about, on a cent account, 116 pips is about $1.60. If you're on a $100 account, it's up 1.6%. What's wrong with that? What's wrong with that? In a couple of hours, 2 days, you've made 1.6%. You guys are making 8 to 12% per year on a traditional investment. Just by on $100, on 0.01, you've made 1.6% in like 2 or 3 days. Can you handle that? So it's not about getting rich on one trade. This is what you guys don't seem to understand. This is about getting rich over a period of time. It took Warren Buffett 65 years to turn his $100 that he bought shares in 1960 to become one of the wealthiest men on earth. It goes like this. It's very, very slow. And then it goes like this. You've got a parabolic curve because it's compounding. But you've got to start slowly, learn, make mistakes, get good at it. Because my mentor said, get good at something worth getting good at. Most of you, yes.
Sorry, just on that example, on the second red candle.
Yes, Anton.
That followed. Just for example, if that candle closed below the 8 moving average, would you have closed the trade?
I don't close trades in a loss, but.
All right, then you would have hedged it.
Yes.
That middle long red candle that came down.
Yes.
Okay.
So if the second candle opened below the 8 exponential moving average, after I placed my long, I would have placed a short and I would have hedged.
Makes sense. Thank you.
Okay. Get good at this, guys, because there is no other option than this. How else are you going to get rich? You're not going to get rich in your job. This program helps you to collapse time frames. That's what this is. Collapse retirement time frames down from 20 years to 5 years or 10 years. Just focus, use good wallet management, follow the rules. Write down the rules and stick to them. Remove your emotion about entering and exiting the trade with your rules. Okay? Then you need to have 2 sets of rules. You need to have rules, trading rules. When do I enter? When do I exit? When do I hedge? That's it. 3 rules. Very simple. Okay? Then you need to have another set of rules. Those are your money rules. Wallet management rules. So that you can, if it goes pear-shaped against you, you can dollar cost average out of the trade and make money. I can dollar cost average because I've been doing this for 8 years. Some of you will not be able to do that yet. You'll need to just like have the trade and trade out of it. That's why I've done this. Okay, this is just today, $2.77. The account is $100, so I've made 2.7% in 1 day. So we had the trade open since the 20th. Today's the 27th. So in a week, we did 2.7%. So there's 52 weeks in the year. So that's 100% profit over a year. Don't try and get rich in one trade. This is a long-term process. Protect your capital. Warren Buffett has 2 rules. Protect capital. Rule 2. First rule. Don't lose money. Protect your capital. Rule 2, refer to rule number 1. Protect your capital, don't lose money. And the only way you can do that is through hedging. Okay? When you lose a stop loss, you've lost the money. You only lose money when you close the trade in a loss. That's the only time you lose money. Okay, can we continue? Right, so here's a little example for you. Do I have to go through the example for you? I've done it. I don't want to do it again. Can we continue? So here's an example of you take a buy trade and it fails. Okay, so this is where the dollar cost averaging comes in. You take a buy trade over here and it fails. So you take a sell trade over here when the second candle opens below the 8 exponential moving average, and you take a sell trade. The second candle opens above the 8 EMA, you close your sell trade, you've made the money, this trade is in a loss. So you place another buy trade over 1, 2 over here. You place the buy trade, it's probably 1, it's probably here. This trade over here, you take the buy trade, okay? And the price goes against you, and you take a short and you get into the short over here, and then you close the short over here. So now you've got 1, 2 trades that are in a loss, right? But you've made profit over here, and you've made profit from here to here. That's where you would have gotten out of the trade over there. When the second candle opened above the 8 exponential moving average, you would have gotten out of the trade. So now you've made profit twice. Then you take another buy over here. So you've got now 3 buy trades. And you've made lots of profit on your sell trades. Right? So it's very simple to understand. And then what happened was, check where the price went after that. So I'm just trying to see what date this is, 26th of June. 26th of June. I know that you can't see my screen. Okay. So there it is, basically. Let's have a look. There. That's what you're looking at. Okay. On the left is what you're looking at. Yeah. Would have gotten into the trade, out of the trade, and then look where the price went. Look where the price went. It went up to 1984. All these trades over here are now in profit. So you made profit on the down, and now the price reversed, and all those buy trades that you had, the 3 buy trades, they all went into profit, and you closed them in profit. So you made profit going south, short, you made profit going long. Very, very simple to understand. Okay, let's read some of these questions that we've got here. How do you see this ATMA? Well, I sent you the homework, and I hope that you would have done it, but let's put it in again for you into the chat so that you can go and do your homework, because the homework has got all that information there for you. Can you show another example? I did, Nick. Thank you very much, Cole. How would one manage a hedge if the 2 entry points are far apart from each other? Let's say that the one entry at the top. I did do that. And Marie, did you see how I did it? Welcome to the webinar. Long time no speak. Where I partially closed the trade. I partially closed the trade there, okay, from profits. So you can use 5%, 10%, 50% of your profit to start getting rid of a trade that's 500 pips away. If it's 100 pips or 200 pips or 300 pips away, leave it. Price goes up, price comes down, price goes up. That's the market. Will eventually come down. I've got trades for over 3 years still open. Don't want to trade, don't want to close them. It's not necessary. It's not irritating me. They're small amounts of money for me. Can stay there. Will this work on the other candle timeline frames or only for this? Works on every time frame. So if you're going to trade on a lower time frame, like a 4-hour chart, like a 15-minute chart, to scalp the market, let's give you an example. Okay, we know now, firstly, we're on the 200 moving average, so it's not a good time to trade, but the price is going north, we're hoping. So let's go to the 15-minute chart. Look here. The second candle has opened above the 8 exponential moving average. Let's trade. We'll take a small trade. What am I trading here? 0.1. So let's take a buy trade. 0.1. Buy. Why? Because we're scalping now on a 15-minute time frame. Okay, we will get out at the 200 moving average is where we'll get out just below 1966. So we'll put in there, because I'm not trading I don't want to trade this that often, and I'm on a short time frame, and I'm not going to be watching the chart. I'm going to put in a take profit here. Okay, but I don't normally put in a take profit. So I'm going to put in there 1966. Which one is it? It's this one, 1966. Take profit, 1966. I don't normally do this. I don't like taking profit, but it's going to be at the 200 moving average. So there's no point in holding the trade longer than after the 200 moving average. At the 200 moving average, it is a no trade zone. We don't trade. But the price is above the second candle is above the 8 exponential moving average, so we trade. If it goes south, okay, and the second candle opens below the 8 exponential moving average, I will place a hedge trade. But I won't place a hedge trade because I refer back to the 4-hour chart and we're on the 200 moving average. So I will not place a sell hedge trade. I will wait for direction. So if you're trading on a lower time frame, you must always go back and see what's happening on the higher time frame. I like the 4-hour chart. I make good money on the 4-hour chart. Okay. Yes, I'll send you copies of the webinar. Don't worry. Okay. Do you understand that so far? So let's go back here. So we've placed the trade. We'll just go there. We'll go to the 15-minute chart and we'll watch it a bit. Okay. Can I continue with my seminar? So this strategy has an 8 out of 10 success rate. I wish it was 100%. It's almost 100%. With the hedge strategy, it's about 99% win rate. My traders, do you agree with what I've just said? Say yes or say no. I'm interested. Does the first candle need to clear the ATM? It's no, Yaku. It's the second candle that opens above the 8 exponential moving average, you place a trade. If the second candle opens below the 8 exponential moving average, if the buy trade is in profit, close it. If it's not in profit, just open a sell trade with the same lots as you did with the buy trade to hedge your account. Very, very simple. Okay? Right. So you guys are saying yes, that this is accurate. Okay, I presume. So candlestick reversal patterns, very, very important to understand them. There's 15 candlestick reversal patterns. They're easy to understand. They're easy to identify. So you can take a screenshot of my screen now. These are the different candlestick reversal patterns. There's the hanging man, the hammer, there's the evening star, the morning star, the bearish and bullish haramis, the doji, the hammer, the shooting star. Okay, these are all reversal candlestick patterns. I do not trade on them. I just notice them. These are three crows. Then you've got 3 white soldiers, followed by the shooting star, followed by a hammer. Okay, you need to understand these candles. There's lots of data in the candle. It's like a floppy disk. Back in 1980, there was a floppy disk. Okay, and on that floppy disk, there was 1.4 megabytes of data. That's what a candle is. Okay, it's data. You just need to understand how to read it. Guys, just give me 1 second, please. I need to just go and help my cat that is bugging me at the door. 1 moment, please. So there's 15 reversal candles, nothing to get too anxious about, just go and learn them. Now the next very important point about trading is choosing a broker. You need to choose a broker that is trustworthy, that is reliable, that is regulated in the country that you reside in, okay, and that is cost effective, that has low spreads. Now, the broker that we use, which is in the pre-seminar training, has been trading for 14 years. They are trusted by over, I think, 27 million traders worldwide. They're regulated in 4 countries. They're regulated in South Africa, Belize, Cyprus, and Australia. And they have low spreads, but the most important point about them is we can get the swap fees removed if you belong in our organization. Now, normally to get the swap fees removed, the swap fee is an overnight charge that you are charged when you hold a trade for more than 24 hours. So let's go back to my screen and we'll open up the trade. And this trade was opened on the 20th at 9 o'clock. There are no swap fees, there are no taxes, there are no commissions, there are no charges. I can hold a trade for years. Now, most brokers don't allow you to do that. So you can't hedge for days and weeks and months at a time, because every day you hold the trade, you are charged a fee. And that fee eats into your margin. And eventually, if you hold the trade too long, you will have a margin call and you will blow your account. So these brokers are not your friends. Okay, there's no friends here. They are a business. They operate like a business. They have charges. Okay, luckily for us, because I've been with FPS for 8 years, okay, I'm the biggest affiliate in Africa. We've got over 20,000 people that we've brought to FPS, and they've named me as the ambassador of Africa. So it's a lovely title to have. I'm not interested in the title. I'm interested in helping my traders not get caught by the brokers and by the institutions. So we organized for you guys to have no swap fees on your accounts, but you have to belong to our structure. So you can get hold of me and I will help you to get that done for you. So let's go back. The other problem is that you guys are joining scams and possibly hypes. So a hype is a high yield investment program. And I really do get it, guys. It's desperation. You need to feed your kids. You need to feed your wife. It's embarrassing as a man. You're not providing for your family. You see a website that's got 10% profit in 2 hours and 50% profit in 5 days and 3,000% profit in a week. And you join these programs, and they're Ponzi schemes. They're nothing but a Ponzi scheme. It's when they roll money, they take money from old investors to pay new investors. Eventually the money runs out, and then in a week or two, or in less than 2 years, that program is gone. You've lost your money, and you've lost the most important thing in your life, your reputation. So if you have invited friends to these Ponzi schemes, you burnt. Your database is burnt. You have to start creating a new database from scratch, finding new friends, etc., because you'll be hated. Lots of people get burnt. Some people even commit suicide because they invest their fortunes. So stop it with the scams and the hypes. Just join a regulated broker. Okay? Much better. Are you getting value so far? Let's have hands up. Let's have questions. There is a question. If you're getting value, then please say you're getting value. One person getting value. So should we call it a day? Have you had enough of my voice? Not yet. Okay. So who loves watching charts? Is there anybody here that's loving watching charts all day and wants to sit in front of their computer and watch charts all day? Anybody at all that wants to do that? Put up your hand if you want to watch a chart, okay? Not a chance. Me too. You want to sit in front of a chart all day? Groovy. No judgment. Okay. I don't want to be sitting in front of a chart all day. Okay. I live in paradise. I live in Plettenberg Bay for a reason. There's the ocean here. I like to go to the beach, and I like to go on walks, and I like to drive around, and I like to check out, thanks Morris, and I like to check out what's going on in my little town of 60,000 people. Okay. It's like Monaco in Rand. Okay, it's fantastic. I don't want to be hostage to a chart. So let me show you what I created for you, Oaks. I created a tool called the 8 exponential moving average. So let's open a chart. Chart window. Okay, there's my chart window. There is my 8 exponential moving average. You can add it to the chart in 2 ways. You can right click it, you can add to chart, or you can drag it onto the chart. Very, very simple. It's pre-set up for you. You've got lots of different settings. You've got settings to be notified when the price reaches the 8 exponential moving average, when the second candle opens above or below the 8 exponential moving average. Here it is. Okay, you can set it like if it's like 20 pips away or whatever, what sort of distance. You set it for the 100 moving average, the 50 moving average, the 200 moving average, and you just click OK. It's pre-worked out for you, and it basically tells you exactly when to trade. You don't have to sit in front of your chart anymore. Those days are gone. Okay, check this out. And this thing works on all time frames. So if you change it to a 15-minute time frame, it'll just scan the charts and it'll tell you which candle is ready to trade. So when you go, so let me just add my template here first, and then I'll add the 8 exponential moving average back so that you can see exactly what's going on. Okay, so it takes a few minutes for it to scan the market, and then all the why it's taking so long. Let's just close this chart down. Let's open up another chart, and we'll just redo that quickly for you guys. Chart window, we'll add the template, we'll add the 8 exponential moving average. Let's go up a bit, add it, there we go. Check it out. 15 minutes. So if you want to trade on a 15-minute chart, you can trade on a 15-minute chart. If you click on here, so red is for sell, blue is for buy. So if you click on there, it changes. So we opened a gold chart and it automatically changed the AUD CAD chart. So there it is. Second candle open below the 8 exponential moving average. Place a trade. On the 15-minute chart, refer back to the 4-hour chart to see the general trend. If the trend is up, then don't place a short. Very, very simple. So if you go to the 4-hour chart, it tells you exactly what's going on. So let's check it out. CAD CHF. And CAD CHF is a fantastic currency to trade because it trends for days. Okay? And it's non-correlating to gold. It trades in the opposite direction to gold. Do you know what that means? Who knows what that means? Put your hands up. And do you know what that means? Correlating, non-correlating. Do you know how to tell if it's correlating or non-correlating? Okay, let me give you a little gift. Let me show you something groovy. FX Blue. Let's go to Market Watch. Let's go to the correlation matrix. I will paste it in here for you, Okies, so that you can see what's going on. So most brokers don't allow you to hedge. So how it works is if you can't hedge, okay, you can't hedge against the currency that you, so if you place the sell on gold and it goes against you, you can't place a buy on gold. A lot of brokers work like that. So you have to find another currency that doesn't correlate with gold. So here it says here, a value of 100 would mean exactly opposite in movements. Okay, so if you're trading XAUUSD, you need to find a currency that is negative 95, okay, to gold. So here's USD JPY, which is 85%, and then you need another 15%, okay, that you can trade with. So there's 2%. So, and then 28%. So you can almost be hedged. And then the other way to do it is you need to lower your lot sizes, okay, so that you can be 100% hedged. It's mathematics and a pain in the butt, okay? Use the correct broker like we do, and you'll be able to hedge trade amazing. But this is a correlation matrix to know which trades, which currencies will trade together. Very simple to understand. Hope you enjoy that little tool. So here is my little tool, okay, that's going to help you to understand where to trade. So here's another one. USD JPY, it's a buy. Okay, but we were on the 200 moving average on the H4 and check how it failed. Although the second candle opened above the 80 MA, we wouldn't have taken the trade because of the 200 moving average. We would have ignored it. And then look what happened to the candle. It failed. Simple to understand. You can now look at a chart and within 5 seconds, you can decide whether you're trading or not. Instead of drawing support and resistance lines, little diagonal lines for your flags and your pennants, drawing a Fibonacci thing, looking at your MACD, your RSI, your stochastic, drawing Bollinger Bands, volumes. It's like, what are you doing, guys? I hope that you see the value in what I've just taught you tonight. Your trading life is about to change, okay? So let's look at another one, CAD JPY, okay? CAD JPY. Again, we're on the 200 moving average. Poof, failed because of the yen. So that's a bad example. Now, here's the most amazing part about this indicator. You can set this indicator to ping your phone, okay, when it's time to trade. So you don't even have to look at the indicator. Your phone will tell you. So check this out. Look at this. So I'm hoping that it'll work. Oh, I closed it. Maybe I shouldn't have closed it. Test. There. Check. Oh, well, I don't have to do that. You can see here. Look, there's the message. Okay. It's time to trade. I got a message on my phone. Check. I'll do it again. Okay. There's the message. So if I open it, if I scroll up, it's there. It's got it's got a message here. So I now know that it's time to trade. So simple. Do you love it? I love it. It's amazing. It's fantastic. Okay. It's life-changing. You don't have to be in front of your computer ever again now, or on your chart. You don't have to watch charts. You don't have to scan it. This thing can scan 27 pairs. And if you want to, you can open another chart to scan more pairs. Add the little indicator. I'll give it to you for free. This already set up. Okay. And then you can add this. And then I've loaded a preset for the majors. Check. Just the majors, 4 currencies. That's it. 4 pairs. Okay, so it tells me exactly what's going on, and there I know. So the price is close to the 200 moving average. It's time to take a trade. So if we go there and we open up GBP JPY, let's go. This is on an H1. You can see here, check at this drop. Amazing. Okay, amazing. So we would have entered over here at the fractal. That's where we would have entered. The fractals, Paul Williams fractals. Oh my God, it's another game-changing indicator for you. It is science. Okay, you have to use the Paul Williams fractals indicator. So let's go back to the chart and explain that a little bit for you so that you can understand what's going on. Why is my phone not available on the screen anymore? One moment. Let's try and fix that problem. Okay. Right. Okay. So that trade has gone south, but it's not a problem. We're still waiting for it to go north. Maybe by next week it would have gone north. H4. Okay. So let's say you've placed a sell trade and you want to take advantage of the sell trade and you want a dollar cost average into the trade. When do you dollar cost average into the trade? So check this out. Your second candle opens below the 8 exponential moving average, 1, 2. This is when you get in. You get in over here. 1 lot size. Okay, whatever lot size you're trading. When the price goes below the fractal, Bill Williams says if the price pierces the wick, so if the price goes below the wick, let's draw that for you. So if the price goes there, okay, at the beginning of the fractal, Bill Williams says place the trade. Okay, that's when he says place the trade. So you can place, I would say, 1 or 2 trades. You can decrease your lot size when you're entering on the fractals. Because if it goes against you, you now got to then add up those lot sizes and hedge. Okay, just remember that. So don't over leverage so that you blow your account. It's for more experienced traders. That indicator cannot place trades for you. You place it manually. It's an indicator, not a trading robot. If you want a trading robot, this is the trading robot that I use, and I've made 1,421.8% profit in 319 days. I make 28% profit per month on average. Been doing that for years. For years. The robot is 8 years old, and we fix it and we change it every month. It's amazing. Okay, so if you want that type of return on investment and you want to make passive income autonomously, there's the link. Okay, cool. So this is what I offer. I offer a mentoring course. In my mentoring course, I'm going to teach you exactly what you've learned tonight. I'm going to teach you how to read a chart with video tutorials. So you learn at your own pace. It's not a classroom, okay, where you learn at the pace of the slowest student. You learn via videos. I've also got a Telegram group. Okay, a Telegram group. I'm actually going to go back and I'm going to ask Guy, the institutional trader, to give us some words of wisdom in a few minutes. Okay, so there's a Telegram group, which is very important, where I'm active all day, answering questions, telling you what I'm doing. I'm not FSCA regulated, so I cannot give you advice. I can only tell you what I'm doing and what I do in the past, and I can tell you what I would do in a situation. It's not trading advice, it's my opinion, which I'm allowed to give. So Guy, unmute yourself, my brother. Let's chat about stuff that you love. Now, Guy's an institutional trader. Guy, put your hand up so I can unmute you, boy. So Guy's an institutional trader. He traded with FNB, and he was there for 2 years, 3 years, maybe longer. And he traded on the trading desk there, trading $50 million trades. So Guy, tell me where you want to go, my bro. You want me to go to FX Blue? COTS?
No, let's go to FX Book.
FX Book, the app.
Yeah, and maybe you can start showing the guys what that is.
Okay.
And then I'll build on what
No, I'm not going to take the glory. You can explain it.
You start, seriously. You start and I'll build from there.
Okay. So my FX Book basically is a company where you can upload your trading statistics. So there's two places that you can upload your trading statistics. One is FX Blue, which I just showed you, which is this one over here. The other one is my FX Book, okay, where a lot of people, millions of traders, upload their trading data so that they can get a graphical overview of what their trading looks like. So the MyFX Book has got a lot of data of what's happening in the market. They can see who's placing short trades and who's placing long trades. Now, if you didn't know, with Forex, it works on supply and demand and buyers and sellers. So whoever gets profit from a trade has taken money away from another person. So there's a winner and a loser. So if you make money, somebody on the other end of their trade has lost money. Normally, okay, that's how it works. So on FX Book, on my FX Book, there's what's called the sentiment indicator. Okay, if you do it on your phone, there is, let's open it up. It's called the Outlook. So you need to download the app to your phone. And then when you're on the phone, you go to the 3 dotted lines and you go to Outlook. And the Outlook is the same as what you have on my FX Book. It's the same thing. I've just edited it so that it only shows me what's happening. So it tells you exactly the positions that are being held by the retail traders, us, retail traders, not institutions. So it tells us what the sentiment is. If most of the traders are having long positions or most of the traders are having short positions. So the reason I believe, in my humble opinion, why people are long with gold. Number one, we're on the 200 moving average. And number two, a lot of people are using martingale robots, which is extremely dangerous, and grid robots, which is like dollar cost averaging robots, which is what we have. So the grid trading robot basically works counter to the trend. It trades the same way as a hedge fund manager trades. It dollar cost averages into the price. Okay, and that I believe is why the sentiment or the outlook of the retail traders is long. Now, the banks do something different. Okay, they work against retail. That's what they do. They work against retail. So they are waiting for everybody to go long, okay, and then they dump the price, which is what they've done. So Guy, you can comment now and tell me.
I couldn't do better than that, Al, to be honest with you. I'd like to take just one little step backwards and just talk to you about fundamentals and macroeconomic. It's very, very important for you to download my FX book if you are going to trade the way Alan's teaching you. You follow a strategy 100%, but it's always good to keep a finger on the pulse with what's happening worldwide because it also moves markets. So if you're looking at the big ugly bear, which is the US interest rate scenario, the US has been hiking interest rates for a long, long time now, and the dollar's been on a war path against every other currency. And now we're starting to see a reversal of that, although some figures came out that were inflationary, which backs up the interest rate hikes. It's starting to slow down quite a bit. Now, why am I telling you that is because on my FX book, next to the sentiment, you have the calendar, and every day there's news. It's rated by 1, 2, or 3 stars. The 3 stars are the market mover. What moves the market? Volume. Okay, volume moves the market. So every day, at 2:30, New York comes in, the US market opens, and that's where the money sits, and that's where the volume comes in. All right, so if you have a look at your charts, you look at 2:30, you'll see volume, you'll see movement. So it's very important for you to keep the finger on the pulse of the market by looking at news and seeing what's out today and looking at where there's red folders or 3-star folders, red folders or 3-star folders, and to see what there is out there today. Now, in conjunction with that and together with that, you look at the sentiment or the outlook. And like Alan said, where there's a winner, there's a loser. And the institutions, okay, take out retailers because that's where they make their money, by taking out the retailers. Now, let's have a look at what happened yesterday and what happened today. All right. Yesterday's sentiment, retailers were short in gold. Okay. Go to gold, Al.
I'm trying to find it.
Did you not? Oh, it's on your phone.
No, I've got it.
There we go.
Oh,
All right. So you can see now today they're long. All right. But just yesterday they were short. Okay, retailers were short. So at 2:30, New York opened. The FOMC interest rate, I think, was at 8 o'clock last night. And as predicted, the FOMC raised rates by 0.25%, 25 basis points. Now, obviously, that should be a pro-dollar scenario because that means that the US bonds increase in their coupons, their interest rates, and their dividends, and that should be supportive of the dollar. And if the dollar increases, gold decreases. If dollar goes up, gold goes down. All right. Now, remember what I said yesterday, retail was short. And we on a Telegram group. Now, let me talk to you about the Telegram group quickly. It's critical that you're on there because we talk strategy on there all the time. And Alan's very, very active on that Telegram group together with our community. And what we said there was it wouldn't surprise me because retail is short even if they hike interest rates, which should be bullish for the dollar and bearish for gold, it wouldn't surprise me if the gold doesn't tick up to take out the retailers who are short, okay,
with their
and then
stop
plummet
losses.
lower.
So the retailers
their
have got
stop
stop losses,
Correct.
and the institutions hike the price. It hits the stop losses, and also
Takes them up.
activates sell orders, creates liquidity in the market. So there's no bullish pressure anymore. There's nobody with long orders anymore, and they can sink the price faster.
100%. And so retail is short. It wouldn't surprise, even though the FOMC hiked interest rates and gold should have gone down. We said it wouldn't surprise us if they spike it up and then take it down. And it's exactly what happened. But the only difference is
They
didn't
did it a
happen
day
the way
later.
we thought. Yeah. We thought it would happen there and then, but it didn't.
Yeah. So normally
the
what
int-
happens is on the chart, there's a massive spike like here, like there. Let's say this was the candle. There'd be a massive spike down, a massive spike up. It stops out everybody. Everybody's stop losses get triggered. Okay. The sell orders get triggered. There's no more buying pressure anymore from the bulls. All the bulls have been taken out because of their stop losses, sitting at 30 pips, like everybody's been taught. That banks know that the stop losses are between 30 and 50 pips. So they move the price up 50 pips. Everybody gets stopped out. The sell orders get placed, and then the bank takes over. They place a massive order of like $50 billion. That moves the market, and then it starts going down. And then the EAs around the world start then placing their orders.
And that's exactly what happened. The rate was up as predicted. The market initially reacted lower straight away. And we thought, okay, here we go. It's going down as predicted. And it immediately turned around,
Correct.
Went back up, broke the highs, went to 82, okay, and stayed there until today. Now, if you look at your calendar today was jobless claims, which is another 3-star folder, and
but nothing that it would, none of these news items would have affected the gold price to have tanked this amount
as severely,
significantly. It's
it's
crazy.
100%. It is an inflationary figure, the labor market. And it does either back up the policy of the FOMC in terms of the interest rate policies, because it is an inflationary figure, because it's a direct reflection of what's happening in the labor market.
Guy, I must say that an 8,000 people increase, okay, in jobs is not major. Okay, here again, it's not a very big increase. It's small.
It's jobless, so it's less people going to like what we
correct.
Would call
it's less people going to UIF, okay, claiming unemployment insurance.
Exact benefits.
Correct. Benefits.
So that's showing, because less people claim for not having a job, it's showing that the labor market is still tight, it's still inflationary, and that was the catalyst that the institutions needed to absolutely bullet the price down.
So they used it as an excuse.
And where is retail today? Show the sentiment. Remember, retail was short yesterday. Where's retail today?
It's
Look at
long.
that.
But it's
Retail,
only long.
What percentage
it's
long
only
is that?
long.
80% long.
80%. It's only long because the orders have been activated on the robots.
So this is not an exact science. Please understand me. I'm an ex bank trader. I don't have the ins and outs. I've learned a few things along the way. I'm part of other communities, and I learned through them. This is not 100% accurate science. What it does is it just offers confluence in your decision-making process, so that if the 8 EMA candle breaks higher, okay, and you've got a bull signal, a long signal, and retail is short gold, it's a confluence. You know, you add it to your decision-making process, you know, and that's how we use it as a community, you know, and that's how we sort of piece the pieces of the puzzle, and we bring the puzzle together to try and help us make that decision. But we follow the strategy like Alan's taught us, and we just want extra data to bring comfort.
And that's exactly what you're going to get when you join our community, is that you get access to all these traders that have been with me for years. Guy as well, been with me for years. And we all discuss, you know, trading is lonely on your own, extremely lonely. So when you're part of a community, you can ask questions and you can make sure that you're trading correctly, entering correctly, exiting correctly, asking questions of professional traders. And that is extremely, extremely important. So what I'm going to do, thanks, Guy. Appreciate your insight, brother.
If you do me a favor, just to show everybody that's online that we're not talking crap, okay, go to Chit Chat, go to yesterday, go to 6:55 p.m. Okay, and look at what we posted there and exactly what we told you guys now online.
Where?
6:55 on Chit Chat last night.
1855.
Go down.
Right, there.
Look at that. There's retail sentiment yesterday, short 71%. That's I posted that. There's my comment, retail percentage on short holding. So if they hike, we might see a liquidity grab up to stop retailers out and then drop.
So let me ask you a question. What, in your opinion, does this mean in the short term?
Well, like I said to you today, the probability, and that's an important word because there's never a guarantee. The probability is that, because sometimes the market does go in favor of the retailers. You know, it happens for sure. You know, but the probability is the market's going to move against the retailers. So if the outlook is long 77%, I think gold's going to go even lower.
Yeah, so I agree with you. I reckon that we're going to see 1930, 1924. I think the sentiment is the outlook's going to go to about 80%. I find that usually at about 80%, the banks get involved and they start reversing it.
Yeah. All right.
So 80% of the market is involved and then they stop them out. Thanks, buddy. I appreciate your insights. So I hope that you guys found that interesting and what sort of value we're going to offer you when you join us with our mentoring. So I'm going to teach you how to trade safely without a stop loss. I'm going to teach you how to trade without a take profit. I'm going to teach you how you can make between 200 and 400 pips profit per trade. I'm going to teach you also, I'm going to teach you how to use the 8 exponential moving average so that you can profit on a daily basis, very important, and how you can only trade a few times a week instead of sitting in front of your computer and trading all day. If that's your thing, awesome, then we're going to help you to make more profit than you've ever made before. So what is this worth? My course is worth $997. That's the value of what you're getting here, okay? What I'm also going to give you is, when you subscribe to me, I'm going to give you my 8 exponential moving average. I'm going to give you my Alan chart template, which is this template over here with all the moving averages and the fractals, so that it's all set up waiting for you and ready for you so that you can use it. I'm also going to give you access to a VPS. This VPS is a computer located in Germany with a latency of 10 milliseconds, 10.78 milliseconds. So what does that mean? When you place a trade from South Africa to the broker, there is between a 3 and 5 second lapse By the time you press the button to trade, to the time that the trade is placed at the broker, if you're placing the trade in a fast moving market, you have lost a lot of profit because of the time delay that the trade takes to then reach the broker. We give you the VPS for two reasons. Number one, the latency. So this thing places trades in 1/10 of a second. You place trades, takes you 5 seconds. This is 1/10 of a second. The other reason we give you the VPS is so that to avoid load shedding. So this thing operates all the time so that you can get pinged to your phone that you're going to be notified at all times when to trade, when not to trade. This is all included in the price of my offer. So if you know what a VPS costs, you'll understand. And the 8 exponential moving average with the template and the VPS costs about $297 on its own if you had to buy it outside of the course. You also get access to the trading community, which is access to the Telegram group where we've got the institutional traders, where I've got expert traders that have been trading with me for years. You're going to get guidance. You're going to get support because Forex is lonely. We're going to motivate you. We're going to help you to succeed. You can ask questions there, as many questions as you want, so that you can get answers. I don't take private questions. I like all the questions being asked on the group. And you can't come onto the group and say, please can you tell me if it's time to trade? We need to know that you've done your homework and you are learning the material. Very important. If you just say, if it's long or short, we're going to say, you tell us. It just means that you are here for a signals group. We're not a signals group. We're a group of traders that give you a fishing rod. We teach you how to fish. We don't give you fish. Okay, there are lots of indicator groups out there and signals groups out there. Most of them are a load of nonsense. Okay, here we've got a proper community that knows what's going on. Okay, and then I do random Zoom calls to help you to understand. These Zoom calls that I do are on a weekly basis. So once you're part of the community, you can come onto the Zoom calls and ask questions. Okay, it's not often that you can get in front of me and speak direct and speak to the other traders and hear from Guy and hear from the other guys and learn from their questions and learn from our answers so that we can help you to better your trading and become more profitable. So the value of this course is $1,791, and you can have it for $27 a month. The VPS costs me more than $27 a month. I'm losing money here because I love what I do and I love giving back and I want to help everybody to become professional traders because there's so many people out there that are just not getting by in South Africa. They're just not getting by. It's tough out there and I get it. Okay, I don't know about you, but it bugs me to see people begging at the side of the road and then cars just go by and they don't help them because they can't help them. They just don't have the money. And most people are like robots. They're just going to work, hating what they're doing, don't know a way out. Okay, like there's people on this group that are in the same situation. You're probably doing a job that you didn't want to do. You didn't like say, oh, yay, I want to become X when I grow up. You probably, when you were a kid, you said, I want to become something else. Okay, maybe a doctor. But after matric, you didn't get the points. So you took the next best thing, whatever it was, engineering, accounting, lawyer, some other profession, because your parents said you have to go to university and you have to get a degree. So most of you are doing what you hate doing or you don't want to do. And you're doing what you're doing as a means to an end because you're trapped. You're in debt. You've got kids. You've got to feed your family. I get it. This is why I say to you, you need to get good at something worth getting good at. Here's an opportunity for you to get good at something worth getting good at. You've got an obligation not only to yourself. You've got an obligation to your family, to your friends, to change the direction of your family tree. You can be the first person in your family to become a multi-millionaire. How will that make you feel? What will you do with the money? Will you buy a car, Maybe you're sick and tired of taking a taxi with other people. Maybe you just want to upgrade your car. Maybe your handles on your car falling off. Maybe you just want to fix your car. Maybe you want a holiday that you haven't taken in 5 years or 10 years because you're busy feeding your family, because you're in a circle, you're on the hamster, you're a hamster on the hamster wheel. Okay? Here's an opportunity to help you. So it's very easy to get involved. What you do is you go to my website. You go and pay for the course. It's $27. I give you all the support that you need, and you start making some money with us properly. Unless you want to make some passive income, where I'm going to teach you how to make 1,421%. Who's made more than 100% profit using my robot in less than 4 months? Put your hands up. Is there anybody here that's done that? Please put your hands up so that people can see that I'm not the only one making money with the robot. I don't know if any of my traders are here. Okay? Put your hands up. Show people that this is real, but you can see this is real. I'm making this. This isn't manufactured. These results are real. All you need to do is you need to take action. Now's the time to take action. Walala, wasala. You snooze, you lose. Okay, and my price is not going to remain $27 for long. I'm going to increase my price to $97 a month. This is an opportunity that is not going to come around very often, I assure you. So I've got some questions, so let me answer some questions. So Anton, Guy, you're unmuted. Asked to unmute. Morris, allowed to talk. So Morris has got a question. If you've got questions, now's the time to ask questions so that I can assist you in making a decision. So answer these questions, okay? Have you stopped blowing accounts yet? That's my first question. Have you ever made 300 pips profit in your life before? Are you set to retire in the next 3 to 5 years? If you've answered no to any of these 3 questions, you need to buy my course. You need to come and get mentored by us, because you've seen that we know what we're doing. You're joining a community of professionals. Again, get good at something worth getting good at. How is it going to make you feel? What are you going to do with the money? Where are you going to go? How different is your life going to be after you purchase the software and you start making some money with us? I assure you, your life will be totally different today than it is another day. So I'm going to post my my links so that you've got all the links again. And does somebody have a question? Anybody have a question?
No, I don't have any questions. No, I don't have any questions. Sorry, I think my hand was up by mistake.
Okay, cool. No problem. You can just lower your hand and mute yourself. Thanks,
Okay,
Morris.
good so.
Okay. So it's a good opportunity now. Go and purchase my course. Come and join us. Let us help you. So let me go back and share with you exactly what you're going to get. Please mute yourself. Thank you. Okay. So I'm going to teach you how to read a Forex chart using video tutorials. We're going to teach you how to hedge trade like the institutions. We're going to teach you how to trade safely without a stop loss. We're going to teach you how to trade without take profit, how to make 200 to 400 pips profit per trade. We're going to teach you how to make between $30 and $50 profit every day by using the ATMA strategy. This is worth $997. We're going to give you the ATMA indicator, which is this indicator over here, which is going to tell you when to open a trade, when to close a trade, and you can do this on all time frames. I'm going to give you the Alan chart template, which is this template over here, so that you can know when the price is above or below the 8 exponential moving average, so you can make trading decisions based on that strategy that you've learned. We're going to give you access to the VPN located in Germany. The value of this is $297. We're going to give you the FX trading community with like-minded individuals that you can join, the Telegram group. We're going to give you guidance, support, motivation, questions and answers that you can ask, Zoom calls, more webinars, etc. and the total value is $1,791, and you can have it for $27. It is a bargain. Did you guys enjoy what you learned this evening? Do you have any questions for me? The $27 does not include the robot. It's a separate price. You can go to the website and go check out what the prices are. Can you successfully execute a trade using only the ATMA, or is it interdependent? Well, the 200 moving average is a place where we don't trade. It's a no trade zone. So if you've got a candle that's opened and you're 20 pips within the 200 moving average, don't place the trade, because it could go against you. We know that it's a reversal line. It's either a support and a resistance line, depends where the price is. So it's better that you use all the indicators together: the 200 moving average, the 8 exponential moving average, and the second candle that opens above or below the 8 exponential moving average to make your trading decisions. Very, very simple. Okay, and you can trade with the strategy on any time frame. Do you guys have any questions? How can I serve you? Cool, Ernest. So you've got the link. You can paste it in. You can just copy it and then go and check it out. Has anybody got any questions? Did you enjoy the webinar? Do you have any feedback? Did you learn a lot? Are you ready to get started? Are you ready to make money? Cool. So if you guys have got nothing...
Alan, I've got a question.
Yeah, sure.
Okay, thank you for tonight. Definitely learned a lot.
Oh, brilliant.
With regards to gold on the 4-hour chart, it's sitting at the 200 moving average. So we do nothing in terms of trading at that point,
well,
right?
I placed a long. It's a risky trade. I've placed a long.
Okay, fair enough.
But if it goes against me, it doesn't matter. I've dollar cost averaged into the position. If it goes below the ATMA, when it reaches about 50 pips, I'll think about trading. I'll see where I am in a longer period, okay, and see where my support and resistance lines are, and then I'll trade. You can see that 1901 is like the lowest, but it's miles away. So I mean, here there's a support line here. If we change this over, see, guys have left the chat, and this is so important to stay on until I actually close the webinar, because you miss so much information. So if you want to learn how to draw support and resistance lines correctly, change your chart to a line chart, and then you can draw support and resistance lines. So support and resistance line, it's when 2 or more candles are touching. Okay, so there's a support and resistance line there. There's a support and resistance line there. So 1937. That's why I said it on the group, between 1937 and 1924. Because you've got that line and you've got that line. There's where I get my support and resistance from. So that's the channel that it could possibly get stuck.
Okay, but if we were following strictly strategy, the second candle is actually open.
But you also, it's the price is low. So strictly speaking, I don't trade near the 200 moving average. I've dollar cost averaged at the 200 moving average. If it goes south, it's fine. I'll place a short.
Okay, but if we are, I understand not trading on the 200 moving average, but the second candle is below the ATMA. If it drops 30 or 40 pips below...
Are you talking about currently? You're saying that the second candle is open below the 8 exponential moving average. Should I place a short?
No, that's not my question. My question is, it ticks the box for the ATMA, right?
Yes, but you can't place a trade because you're on the 200 moving average. So strategy speaking, you wouldn't place a short because you're on the 200 moving average.
Right, but if it goes, if it then goes like, what is it, 30 to 40 pips below the 200 moving average?
Then I'll place a short.
Right, okay, got you. Thanks.
Cool. Anybody else got any questions? Anton? Guy? Johannes?
I'm all good, Al. Thanks.
Okay. And Anton Trump, Johannes Steinberg, I think it is.
Hello, Alan.
Hi there.
I just want to ask you about the weekly and the monthly chart on the gold. It shows that it's showing a triple top.
I don't believe in
on the weekly.
I don't believe in the triple tops and triple bottoms and head and shoulders, and it's not something that I subscribe to.
No, okay. Another thing I just want to ask you is that long candle that broke that, I think it's the 50 moving average. Do you put your hedge trade when it breaks that moving average, or do you wait until the candle closes?
When the second candle opens above or below, I open a trade, whether it's a hedge trade or a trade. That's when I trade.
Okay, thank you.
So it's the second candle above or below the 8 exponential moving average. That's when I place a trade.
Thank you.
Cool. Anybody else got any questions? Nothing.
Oh, sorry.
Okay, cool. 100%. All right, guys, thanks very much for joining me. If you've got any questions, you can ask me on the group. Otherwise, if you're ready to get started with the robot or the indicator, you can go and purchase the robot, or the indicator. If you want to purchase the robot, the link is in the chat. You can go purchase the robot and start making passive income with us. I'm looking very, very forward to making money with you guys. Just know that we're here to help you. We want to see you succeed. So get involved, come and join us. And you can ping me if you want more questions, if you've got more questions. So I'll put my phone number in the chat here. If you've got any questions, you can just WhatsApp me and I'll help you as best as I can. So thanks for the webinar. It was great. I'm a complete noob at this. So some over my head, but still very interesting. I got the robot today. So, oh, shot, Brad. Okay, lekker, mate. You're going to love this. Alan's robot really works. Thanks, Cole. Thank you, Ashley. Thank you, Bonesile. Sorry, I have a mic issue. Just a question on DCA. What would be best wallet management approach and application? Okay, so let's talk about wallet management, Andres. Wallet management is in the eye of the beholder. What's high risk for you may be low risk for someone else. What's low risk for someone else may be high risk for you. This is why you have to have the trading journal, so that when you place the trade, you can understand what your emotions are when you place the trade. So it's like owning, you have got a kid, okay? Do you give your kid a Ferrari on his 18th birthday? No, because he doesn't know how to handle the Ferrari. So you give him a small little car that he can mess around and he can break. The same analogy I'm trying to draw for you is with Forex. You don't understand. Most people don't understand. I'm not talking about you directly. I'm saying people don't understand what it means to open up a trade of 10 pips, 50 pips, 100 pips. They don't understand what is going to happen to your account when you open a trade of that size. Okay, what's going to happen to your margin percentage? Are you going to be able to open a hedge trade? Can you dollar cost average out of the position and go with the trend, or are you stuck? Okay, are you going to blow your account? So you need to understand what your emotions are when you place the trade. If your heart lands up in your throat, okay, or your stomach lands up in your throat and your heart lands up in your stomach, and they change places and they're doing flick-flacks, you know you've used the wrong wallet management. You're not at that level, okay, to place a trade of 50 lots or 100 lots. You've got to gradually get there. It takes time to get your psychology right, okay, to be able to trade that amount of money. You see, like most people, they come in with 100,000 Rand or 500,000 Rand. They use the wrong wallet management. They blow all the money and they say, Forex doesn't work. Forex is a scam. It's not Forex is a scam and Forex doesn't work. It's you don't understand how Forex works. Okay, that's how it is. So you got to go slowly. Okay, learned a lot. Thank you. Do you cover realistic lot size versus managed wallet to help learn wallet management? And I've just gone through that. I can't tell you what lot size to use. You've got to go slowly, and you've got to start understanding what the trades mean to you emotionally. Okay, you've got to understand, even if you've got the money, okay, it's not about having the money and being able to place a trade of 50 lots because you've got $100,000. I assure you, you'll lose all your money. I guarantee it. Because you're not trading, you're gambling. You're looking for a get-rich-quick scheme to help you to get out of your whatever you're trying to get out of. Okay, you can't do that. You've got to start slowly. You've got to start understanding how to read a Forex chart so that you can then, if you knew how to read a chart, you can then take maybe slightly increased risk to exponentially grow your account to collapse your retirement dates, get that closer to today rather than further away. It's all about emotion. So that's why I said this is an emotional thing. You can't remove emotion from this. It's skill and emotion together. You will get rich with this. I hope you've understood that. Just go through the lot calculations. Yeah, there is a lot calculator, but it doesn't help you with your emotion. It doesn't tell you. And those calculations are based on using like 1% risk per trade. I don't believe in doing that. I believe in reading a Forex chart so that you can do this correctly. How do I count pips on a chart? It depends what chart you're on, but let me draw it for you so that you can understand. So you place a diagonal line, and in the top of the screen you can see the numbers moving. Okay, it says there 620.2. Do you see that? That is 620 pips at 6,151 points. The last number is a decimal. It is a point, not a pip. Okay, so it's a micro pip, in other words. So that move is 612 pips. So I hope that you now understand how to do that. Pleasure. Okay, that's it, guys. I hope that you enjoyed this webinar. It's 9 o'clock. It's been 2 hours. And I hope that you got value out of it. Go and purchase my program. I'll paste this program in again for you so that you can go and there it is, course payment page. There it is. Go and pay for the robot. Go and pay for the 8 exponential moving average. Go and pay for the robot if you want to. And then we can get you started, teach you exactly how to make money. So please go and copy that link. Go and pay for the 8 exponential moving average in the course. And then I'll help you out. Once you've paid, I will then send you the information. This is like a French to an... I don't understand. You'll get there, Ernest. This is not... I don't teach you basic Forex, okay? Basic Forex, you can go to YouTube, but you can understand how MetaTrader 4 works and understand how to open a trade and how to open a pip. And I teach you proper fundamentals and technical analysis on how to read the fundamentals of technicals on how to read a chart like a bank trader, like a hedge fund manager. I'm not here to teach you the basics. I'm here to teach you a strategy and a system that works. Okay? Yes, that's exactly why you need to come, guys. You hear what Cole says. He's been with me for months. Okay? Probably almost a year, Cole, that you've been coming and checking and on the group and listening and watching and checking if this thing is legit. He's been with me, I think it's 2 years, actually. Okay? And every week you learn something new, and you will. This is a journey. It's a fantastic journey that you're just going to learn stuff every week. Okay? I speak to my guys that have been with me for years. They still ask me certain questions. They've heard it. It's like it's going to take you 10,000 hours to become an expert at this. I've been doing this for 8 years. Okay, that's 16,000 hours, 8 hours a day for 9 years. Okay, it's about 16,000 hours. I'm an expert at this. Okay, you're not there yet. You will get there. It's like driving a car. You didn't know what you were doing in the beginning. Now you get in your car, you get to where you're going, and you don't even know how you got there. You're an expert at it. You've been driving for long enough. So you can't expect to come onto a webinar, okay, and then understand exactly how to trade. You've got to keep on coming to these webinars. Ask me questions. Keep on coming. Keep on learning. Cool, guys. I hope that you purchased that 8 exponential moving average in the course. And I'll see you next week on the... Thanks, Yaku. Enjoy it. Enjoy it. Exactly, Cole. Wonderful. Thanks, guys. God bless. Take care. See you later. See you next week. Cheers.
Cheers, Al.
Cheers, buddy. Thanks. Bye.